Hey, welcome back, everybody. Another edition of the Nest Egg. Yes, we have switched spots. I'm going to be quite honest with you. I just didn't like the way I looked over there on that couch. Looked like I was putting on a little camera weight.
You're okay with me having the camera weight.
You can have the camera weight because you're 20-0 and you are thin as a rail.
Okay.
Looking good, by the way.
Thanks.
Yeah.
Trying to get the
fit on the
New
New Year?
Year's, get after it.
Have we talked on this show about your New Year's resolutions? I know on the podcast we talked about that regularly.
No, I don't think so. But
You
you haven't talked about yours.
Oh, don't deflect.
Yeah.
Come on, don't deflect. You wanted a hobby, right? You were newly married, by the way. Congratulations.
Yeah.
For those of you who are out there who did not know, Logan was newly married last October,
Yep.
right?
Mm-hmm.
And so now you're realizing you need to get out of the house.
Yeah, do something. Just some hobbies.
And so you're thinking, what's a hobby? And you're now realizing why I run hours and hours on end daily. No,
Yeah.
That sounds terrible, but any hobby, so anything you're doing.
So, workout routine is not really a hobby. I'll start back playing volleyball, sand volleyball again,
Mm-hmm.
which I love to do. And then I've started reading a lot more, which has
Good.
been nice.
Anything interesting?
So I'm almost through Goggins' book.
Mhm.
So I'm working on that, and then
Little language in that book.
Yeah, it's a little
very
aggressive
colorful.
at times,
Yeah,
but it's pretty good.
Yep.
And then I think I'm going to read the one that you recommended next.
Which one?
You said it's
Richer, Wiser, Happier,
yeah.
whatever.
Mhm.
Great book. Great book. We'll put that up there. One of the best. I don't like to read investment books very often because I just think if it's not this is how you get wealthy, do this, or it's something that is thematic, meaning it worked during a particular theme or
Right.
a different environment, and it's not evergreen. This one, however, is really good. Interviews a lot of the great investors over time that we follow and really picks out some of their positive traits and some of their negative traits as well. He actually had some negative thoughts on John Templeton, of the
Okay.
Templeton funds. But anyways, let's get to the content for
Yeah,
today.
yeah.
So welcome back. Happy New Year 2023. We're doing Nest Egg today, and an overwhelming question that we're getting is, what's the market going to look like this year? I wish we had a crystal ball. We don't, but obviously we do this for a living, and we have to sort of set themes or ideas and rebalance and invest accordingly. In fact, we just got done. Most of you who are watching are clients. You've seen a dramatic rebalance in your account. I was speaking with multiple people just recently, saying that for the first time I can ever remember, well, because it hasn't happened since the 30s, so it's never happened on
Right.
my watch, a year where stocks and bonds were down considerably, down enough so that we could do a rebalance across the board, literally shifting out of a majority of the bond positions that we were in, going into similar bond positions, but not creating a tax issue for taxable accounts, but also using those unrealized losses to capture those and offset against many positions for clients of ours that have been held for decades,
Right.
holding, believe it or not, still pretty significant gains in many instances. Not everybody, obviously, depending on when someone came in, and doing a rebalance there. So we've completed that. And if you really want to get micro, you'll notice some subtle changes, changes to the allocation. Not big, but subtle changes in what we're looking at going forward. And so coming back to the question, will 2023 be different? No one knows, but I will tell you this. What the Fed has been trying to do, they have, all intents and purposes, accomplished.
Yeah.
They have accomplished their desire of seeing the inflationary pressure go down, and go down considerably. However, here's the rub. The indicators that they sort of, use to make their decisions have yet to reflect a lot of that change.
Right.
For example, metaphorically speaking, my son, great swimmer, has been in the gym now for several months, consistently working on his strength. He hasn't yet seen that in the pool. He hasn't yet seen that, kind of develop into faster times yet.
Because it takes time to kind of see those results.
Not only that, but the last two meets he's gone to, he's been sick. he has not been at full potential. My suspicion is that very short order, he will go to a meet coming up in a couple of weeks, and he will do exceptionally well. This market is very similar. We have yet to see in the headlines, CPI, et cetera, which is coming out on Thursday. It'll be interesting to see how that transpires. Those inflationary pressures come down, at least headline. But all of the data going into those, for the most part, have come off considerably.
Yeah, because we're seeing, if we're looking at a month-by-month basis, we're seeing CPI data come down to 0.1% or very low amounts each month, but we're still looking in the rearview mirror 12 months and seeing huge inflation numbers end of last year and kind of middle of last year. So when we look back, then we're adding those into the CPI, and the Fed's looking at it and saying, we still need to be super aggressive. We need to fight off this inflation, and basically we're willing to cost jobs. We're willing to have some unemployment in order to see CPI come down and wage inflation slow down.
So they did a subtle shift, and you just alluded to that. They've started talking more and more about wage inflation. So this is ultimately the last, if you will, component of inflation. If you think way back to the webinar we did several times called the Inflation Freight Train, the last component was wage inflation. And what we had alluded to in that webinar is it hadn't come into play yet. It hadn't come into play yet because the business owner who was facing inflationary pressure and ultimately having to pass that on to consumers hadn't yet been asked by his employee or her employee, hey, I need a raise or I'm going to leave. Well, that's happening, or it has been happening. However, at the same time that's been happening, the Fed pressure of raising interest rates and the softening of the economy is leading to job loss.
Yeah,
there are many companies that are laying off people. Now, what's happening there? It's taking some time. So ultimately, the market's always a forward-looking indicator. It always bakes this in ahead of time. That's why people, inevitably, when the news hits, the move has already been made. So a lot of movement we're seeing in the market right now. The market started off pretty well for the month of January thus far, quite a bit different than last year, but ultimately has been in a positive direction and could be foreshadowing some of this inflationary pressure subsiding. Now, it doesn't take away from the fact, and we'll conclude on this, that when we invest, we're investing in businesses. We're investing in going concerns that are going to look at navigating whatever environment they're involved in. Many of you are small business owners. How are you navigating the environment? What are you doing with your employees? How are you passing on those rising costs to consumers? Are you seeing a slowdown? Are you tightening your belt, etc.? What we're doing is looking to invest in companies that have been doing this for sometimes hundreds of years. Ultimately, many of those companies are now selling at valuations that are very, very attractive. Now, we, again, don't get into the micro too much, but there are companies that you know of, that you're well aware of, that are now selling at levels from a standpoint of cash on hand, or maybe a price-to-earnings multiple or a price-to-book multiple. Again, variety of metrics that are very, very attractive. Doesn't mean we can't go further. Certainly doesn't mean that the end, is here and we're off to the races. I just have no idea. But what it does mean is that the values that we're buying, the areas that we're investing in, are certainly much more attractive than they were a year or a couple of years ago. And the piece that we put out, buying high, selling low, which was obviously a play on words, is not what we want to do, was in relation to the general mood that's on Wall Street. And what's amazing to me is always stock market's the only place in the world where something goes on sale, people don't buy, they run away. Now we're seeing people run away. They don't want anything to do with this market. They're out of here. And treasuries, which are yielding a nice rate of return for no risk, are certainly, an option. Yeah. So they now have an option to go to. What it means is that nobody wants to own stocks. That's the time, in my opinion, I actually really like. I like being a buyer of equities here, buyer of the market here, et cetera. And that's what we're doing. We're not changing our strategy one bit.
Yeah, I think that pretty much wraps it up. Is there anything else you want to mention?
No, 2023 is going to be a really interesting year.
Yeah.
I think we're going to see a lot of changes in inflation. We'll probably see other, blips on the radar, whether it's geopolitical or political within the United States. It's going to be other headwinds that we're going to face, but we'll take those one at a time, and obviously we'll bring them to you. Thanks so much for tuning in. Happy New Year. Sorry to steal the limelight from you here.
No, it's okay.
Center
I'm on the hot
stage.
seat over here. I get all the questions about life and everything like that, and you get to do all the fun stuff.
All right. Well, listen, we'll be back to you in a week or so. Make it a great year.